Welcome to RV Academy. In my previous video, I explained about the analysis of financial statements and various types of analysis. In the various types of analysis, we have comparative statement, common size statement, trend analysis, fund flow analysis, cash flow analysis, ratio analysis, CVD analysis. In this, comparative, common size and trend percentages belongs to one chapter, and all others separate chapters like fund flow, cash flow, ratios are different chapters. In comparative statement, we have two, the comparative income statement and comparative balance sheet. Similarly, in common size income statement, common size balance sheet. Similarly, in case of trend analysis, the income statement and balance sheet we have to prepare. So first let me take up the comparative income statement and then I will go for the comparative balance sheet. I will take one problem and work out both comparative income statement and common size income statement. See here, for preparation of comparative income statement or common size income statement, whatever it is, in the Companies Act of 2013, a separate format is being given. We have to prepare the comparative income statement or common size income statement according to the provisions of Companies Act of 2013. So just go through this format. First, we have to take the income part, revenue from operation. It is nothing but sales. Next comes other incomes. Other income means dividend received, interest received, commission received, any other incomes earned by the business will be written here. The total of these two become part A or total of A. Next part is expenditure, cost of material consumed. It is nothing but purchases of raw material, purchase of stock in trade or raw material, change in inventory of finished goods, work in progress, stock in trade. All these three parts. So that is nothing but closing stock minus opening stock. Employee benefit expenses. In case of employee benefit expenses, anything which is paid to employees in the form of wages, salaries, bonus, etc. will be written here. Finance cost means the expenses incurred by the business in the form of interest on borrowed funds, on debentures, on secured loans, on unsecured loans, on any other loans. Any interest paid comes under finance cost. Depreciation and amortization expenses. Depreciation means the depreciation on tangible assets like land, building, plant, machinery, etc. We take the depreciation. Amortization means writing off goodwill, patents, copyrights, trademarks. All these will be taken under amortization expenses. Apart from this, any other expenses given will be written in the last part. Total of B becomes the expenditure, total expenditure. Now, profit before tax, part A minus part B becomes the profit before tax, minus tax or tax provisions becomes profit after tax. In comparative statement, we have to make 4 columns: previous year, current year, absolute changes, that is increase or decrease, percentage change, increase or decrease. I have written that format and the problem I am going to work out now on comparative statement. Just look at this problem. Following financial statement of Soil Trading Company Limited. Prepare a comparative income statement. It's given opening stock, purchases, wages, factory expenses, gross profit, administration expenses, selling and distribution expenses, interest on debentures, provision for tax, net profit. On the income side or credit side, sales, closing stock, gross profit, dividend and rent received. With the help of this, we have to prepare a comparative statement. For same problem, I will work out common size statement later. First, let me work out the comparative income statement. So, first part is income part. When you are writing the income part, just look at the credit side of your profit and loss account or income statement. Revenue from operation, it is nothing but sales 20 lakhs and 22 lakhs. It is given on the credit side. Other incomes, dividend and rent received 30,000 and 40,000. Total income A 20 lakh 30, 22 lakh 40,000. I am going to tell you about these two parts later. First, whatever information given, with the help of that you just fill up these two columns. Cost of material consumed, purchases, it is nothing but purchases. The purchases given as 12 lakhs and 14 lakhs. Change in inventory of finished goods, closing stock minus opening stock. Closing stock is a credit balance, opening stock is a debit balance. Here 2010 closing stock is 6 lakhs and opening stock is 4 lakhs. Opening stock is 4 lakhs. The difference will be 2 lakhs. So difference is 2 lakhs here. So credit side is more. I have to write 2 lakhs here. Similarly, when you take 2011, closing stock is 8 lakhs, opening stock is 5 lakhs. So 3 lakhs is the credit balance. When you have closing stock more than the opening stock, put it in brackets because it is a credit balance. All these are debit balances. Employee benefit expenses, as I said, anything which paid to employees in the form of wages, salaries, bonus, commission. Here we have only wages, 2 lakh 50 and 3 lakhs. Wages, 2 lakh 50 and 3 lakhs. Operating cost, so you can take factory expenses, administration expenses, selling and distribution expenses. All these three parts comes here. 2 lakh 50, 2 lakh 50, 75, 85, 50, 40, 65, 75. Depreciation and amortization expenses given as 65 and 75. Finance cost, interest on debentures, it is 65,000. Interest on debentures 20,000, 20,000. Total B. I have taken all the expenditures by classifying according to the provisions of the companies. The total expenses B comes to 17 lakh 10, 18 lakh 70. The profit before tax A minus B. A is 20 lakh 30, B is 17 lakh 10. A minus B, that is 20 lakh 30 minus 17 lakh 10, it comes to 3 lakh 20. 22 lakh 40 minus 18 lakh 70, it comes to 3 lakh 70. Provision for taxation given as 1 lakh 20 and 1 lakh 30 on the debit side of your income statement. If you minus, the profit after tax becomes 2 lakhs and 2 lakh 40. So these two informations are very much available in the problem. Take the information, just fill up these two columns. Now the comparisons should be made. See here, the current year values are always compared with the previous year. When you compare that, it comes to 22 lakhs minus 20 lakhs plus 2 lakhs, positive value. 40 minus 30 plus 10,000. 22 lakh 40 minus 20 lakh 30 plus 2 lakh 10,000. Even you can add these two, it will be the same. 14 lakhs minus 12 lakhs plus 2 lakhs. 3 lakhs minus 2 lakhs plus 1 lakh. 3 lakhs minus 2 lakh 50 plus 50,000. Right? 2 lakh 50, no changes. 85 minus 75 plus 10,000. 40 minus 50 minus 10,000. 75 minus 65 plus 10,000. 20 minus 20, nil. 18 lakh 70 minus 17 lakh 10 plus 1 lakh 60,000. 3 lakh 70 minus 3 lakh 20 plus 50. 1 lakh 30 minus 1 lakh 20 plus 10. 2 lakh 40 minus 2 lakhs comes to plus 40. So I took all the values here. Now the current year values are compared with the previous year. So that I got all these values. Now the percentages, just carefully observe, the percentages is calculated by taking this column and this column, that is increase or decrease divided by base year. This is the formula into 100. Increase or decrease column divided by base year into 100. So that is 2 lakhs divided by 20 lakhs into 100. It comes to 10% plus 10%. 10,000 divided by 30,000 plus 33%. 33.33%. Whatever sign you have here, write the same sign here also, plus 10.34% or 33%, whatever it is. So 2 lakhs divided by 12 lakhs plus 16.67%. 1 lakh divided by 2 lakhs plus 50%. 50,000 divided by 2 lakh 50,000, 20%. 50,000 divided by 2 lakh 50,000, 20,000. There is no any values here, no increase, no decrease. So percentage also nil. So this comes to 13.33% and minus 20% plus 15.38%. Here there is no changes, plus 9.36%. 15 plus 15.63% plus 8.33% plus 20%. So this is how we have to compare the values and write the analysis. Now this is very easy job for everyone to do it, but we have to write an interpretation. Interpretation means observations what we have made. See, when compared to last year, there is an increase of sales by 10%. Other incomes increased by 33%. Overall, it is increased by 10.34% only. And if you look at the expenses, proportionately, the expenses is also increased like 16.67%. Here, closing stock 50% increased, 20%, 33.33%, here minus 20%, 15.38%. So when you look at the total expenditures, 9.36%. Total income is increased by 10.34%. Total expenses increased by 9.36%. Profit before tax is 15.63%. Profit after tax is increased by 20%. So this is how we have to write an analysis or interpretations for the income statement. I'll take the same problem and I will show how to work out common size income statement. So in the same problem, common size income statement, these two values will be the same. These two columns have not been changed. I just put the values in the other column here. Sales, revenue from operation 20 lakhs, other income 30, total 20 lakh 30. All these informations, whatever we have done in the comparative statement, same format I have written here. Only this particular column you should concentrate. In case of common size income statement, please carefully listen. In case of common size income statement, always we take the total sales as 100%. We assume the total sales as 100% and each individual items are compared with the sales to find out the percentages. Each individual items are compared with sales to find out the percentage. Now look at here, 30,000 divided by 20 lakhs into 100, 1.50. 20 lakh 30 divided by 20 lakhs into 100, 101.50. 12 lakhs divided by 20 lakhs into 100, 60%. 2 lakhs divided by 20 lakhs into 100, 10%. 2 lakh 50 divided by 20 lakhs into 100, 12.50. 2 lakh 50 divided by 20 lakhs into 100, 12.50. 75 divided by 20 lakhs, 3.75. 50,000 divided by 20 lakhs into 100, 3.25. 20,000 divided by 20 lakhs into 100, 1%. 17 lakh 10 divided by 20 lakhs, 85%. 3 lakh 20 divided by 20 lakhs, 16%. 1 lakh 20 divided by 20 lakhs, 6%. 2 lakhs divided by 20 lakhs, 10%. First you have to fill up this column as per the provisions of the Companies Act of 2013. So then you make out two columns here. Previous year percentage, current year percentage. Similarly for current year total sales 22 lakhs becomes 100 here and all the values are compared. Similarly 40 divided by 22 lakh, 22 lakh divided by 22 lakh 40 divided by 20 lakhs, 4 lakhs divided by 20 lakhs, 3 lakhs divided, like we have to compare every individual items with the sales to find out this percentages. So this is how the common size income statement is prepared. In the examination, either they may going to ask the comparative statement or common size statement, any one, not both. One problem will be there for section B. Please carefully observe and work out all other problems. Please share, like and subscribe my video. Thank you.